I have just bought a global transportation company that could become an autonomous vehicle leader despite owning no cars.
It's not only about stock picking and naming tickers. It's like, oh, wow, amazing things happen when you connect on a human level with real humans whose lives were changing.
You came out of nowhere like 3 or 4 months ago, and you have absolutely whooped my ass.
I hate to break it to you, buddy, but the beatings will continue until morale improves.
For an advertising-free version of the show, check out patreon.com/Wall Street Wildlife. Welcome to the Deep Investing Jungle with your hosts Luke the Badger Hallard and Krzysztof the Monkey Piekarski. In this week's episode, it is the end of year 2 of the King of the Jungle Portfolio Challenge. This year, Krzysztof and I were adding $200 each, and we're going to answer the question, who turned that hoard of cash into the most bananas? And did we both beat the market? Plus, this week, Krzysztof is going to give us a masterclass in technical analysis for long-term investors using TradingView. And I have just bought a global transportation company that could become an autonomous vehicle leader despite owning no cars. Hang around for the back of the episode to hear about that one.
Fantastic, Badger. This morning, you're lucky to have me because your pal Monkey nearly killed himself yesterday with one too many banana-flavored cocktails. And I remember, 2 weeks ago that you showed up and you were sounding a little worse for the wear, and you said, hangovers now are like a 2-day thing. Really? Can I tell you? I think what I went through yesterday felt even worse. You know why?
You were drinking banana pants, right? Is that a cocktail or that's a bar?
That was a cocktail. That I drank 2. I'm not gonna name the number of drinks I had. That's it was a disastrous quantity. But yes, banana pants. I had a banana pants cocktail and one. There's a mezcal speakeasy in Austin, in which they had a banana mezcal thing, and so I drank that too. You know what the tragic thing was? Being a disciplined gorilla sometimes. I woke up at 5:45 the next day, meaning the same day technically, because went to bed at an ungodly hour, and then I went to the gym. And I did a good hard workout, right? And I'm like, okay, this is I'm gonna you ain't the boss of me. I was like, okay, this isn't so bad. And then it was not till like 2 or 3 p.m. that the real hangover just like descended like a oh my God.
Wow, very good.
Ooh.
Good effort in the gym. I literally put hangover in my diary. If I know I'm going out for a big one, I just block out. Usually like Sunday, it's going to be like a day on the sofa with the cat. That's I know I'm good for.
Kids, do not try this at home.
Or if you want to try it with us, we have the inkling of the concept of a plan to get together with a couple of our Patreons, potentially in Las Vegas in April 2026. So stick a hangover in your diary if you think you might be able to join us.
Fantastic. That's right. We were workshopping an idea. Is Wall Street Wildlife ready for its kind of like inaugural first live person meetup? And talking to some of our Patreons, and I think we could give it a go. So we're tentatively putting April of 26 as a potential get together in the city of sin. So kids, if you're listening, or beasties, if you're listening to this, put hangover recovery needed for a full week sometime in early April.
Awesome. Well, more details to follow. It may not happen. We're still trying to figure out if we can make this work. But to be honest, we've both been inspired by in real life get-togethers we've both had in the last month or two with a bunch of our Patreons, which is just an incredible coterie of really interesting folk out there. So why not get together en masse if we can make it happen?
Yeah, I mean, this is the proof in the pudding that we've been talking about, that in the age of AI, it's not only about stock picking and naming tickers. It's like, oh, wow, amazing things happen when you connect on a human level with real humans whose lives were changing, and they're making our community just, you know, banger, and we're just having a good old time, and it's making all of it worth it. So to our jungle beasties, thank you. To our patrons, thank you. If you're hearing us on YouTube, check us out on Patreon, Wall Street Wildlife.
All right, shall we get it over with? I need to rip off the pain of congratulating you on your incredible performance in King of the Jungle Round 2.
Yes, I think you should. And it's too bad. It's too bad that we have an ocean between us, Badge, because I would like to have received from you in person this year's the Holy Trophy.
If you're not on the YouTube, he's got a fine-looking banana trophy right there.
This was yours last year. You forgot, and I mean, it was yours. You never got it because I held on to it. But this, if you go back to the episodes, this was Badger's, sitting virtually on Badger's shelf for the 2004 season. But now Monkey is putting this. Maybe this will go on top of the Christmas tree this year. But yes,
it's very well deserved.
Yeah.
Let's take a look at the actual results, because this is just incredible. Check out this ridiculous chart, right? So get on the YouTube and just check this thing out, right? We broadly tracked each other. Like if you cut off like the last 3 months, you would see like the huge hole that Krzysztof got into at the end of year one, and he finished year one actually down. He lost money, whereas your reliable Badger made like a good market beating return. And then Badger I've just delivered nice, consistent, solid gains month after month. And then you came out of nowhere, like 3 or 4 months ago, and you have absolutely whooped my ass. So the official closing prices, the year two runs from 1st of November 2024 to 1st of November 2025. We both started year two in different places. I was quite nicely ahead with about $2,700. You started year two with $1,600. We added $200 a month each, and we managed it as best we could. And we both tried to manage our King of the Jungle portfolios just like we manage our real money. I call it my retirement portfolio. You have your other portfolio. Well, you turned your $1,600 plus $200 a month into $14,638, whereas I turned my little $2,500 into $8,800. Like, we have both beaten the market soundly, but your 380% return in year two, audited as well. There was some controversy.
So Badger number.
There was some controversy about the results. In fact, because you might remember, listeners, if you go back a bunch of episodes, Krzysztof got a bit excited, and there was a potential bottle of rum whiskey bet on whether Krzysztof would deliver more than a 500% return. And he was reporting to me that he was on like nearly a 1,000% return.
It got up to 800 at some point. Yeah.
Like you got ahead of yourself and you published. I said, look, put the numbers together. We're going to publish to the Patreons, but you couldn't wait to tell the good news. And you posted like your official, whatever it was, like 690% returns. It wasn't quite 690%. So when the audit team of Badgers came in and took a proper look, the actual gain in year two, Badger, I delivered 93% return. That is soundly beating the market. That's nearly doubling my portfolio, but Monkey delivered an incredible, essentially 380% gain in that year. And if you compound them together, because this is like a lifetime contest, this was round 2. I hope we get like round 200 one day, right? I'm planning to
Well,
live
right. That's
1,000.
if that fancy AI genetic companies come through. But carry on. Let's
So if you
let's assume at least 25 more, okay? 25 more rounds, but then
25 more rounds. So if you compound our return, so essentially like, if you sort of followed us from day one and now we're just starting year 3, we're like a week into year 3. Well, Krzysztof, you've now delivered a compound return. Even though you had a losing first year, your killer second year, you've delivered a CAGR, a compound annual growth of over 80%, 80.3%. And even though you whipped my ass, I've still delivered a compound return of essentially 66%. So these are both like wildly killing the market. Now we're gonna have a down year one day, right? And maybe it was looking like that was going to come just days ago, but who knows where this week takes us? We're gonna fail to beat the market one year, I'm sure, but right now we're well ahead, and this is like a lifetime game. We're trying to use King of the Jungle to show you how you can compound your returns, beat the market year after year, and in the long run generate incredible wealth.
amen and hallelujah. Badger, can I ask for some mercy and forgiveness and maybe a little explanation of what Monkey thinks happened with his initial calculations. I actually used the good AI bots to try to figure out, on the Google sheet, like what the proper formula should be. And it actually made rational sense to me because it was subtracting the cash from the total gains, but somehow the final numbers just didn't, they were just much higher. But I think the reason they were so inflated overall, tell me if this is right, is that those initial huge gains included the cash we were adding. So from the base to where we ended up, those were the high numbers, but you can't call a gain simply adding cash. So that was Monkey's mistake, correct?
Yeah, like the way you should really calculate your gain on a portfolio is like, so say for this 1 year period, that's like 1 year of a long journey. Well, if you want to look at your 1 year return, it's like, how much money do you have at the start? You need to consider how much new money you added, and like the time value of money, like a $200 added in the first month is more impactful than $200 added in the last month. And there's a simple formula we've used to calculate that called the simple Dietz method. And then you look at like your starting, your finish point, and then that's how you work out your percentage gain.
Okay.
Anyway,
Now
however you cut it, you kick my ass.
right, correct. Now I have some bad news for you too. I hate to break it to you, buddy, but the beatings will continue until morale improves. But Monkey was eyeing his King of the Jungle portfolio, from where we're at. And unless Badger makes some significant changes in his own strategy, I think Monkey's gonna bring in the banana trophy again from 2005 to 2006.
Hey, look,
And
let me just be clear, right? You won. No argument. You won. I am not unhappy with my returns this year in any way. So you
no,
can win year after year. If I can stick to like a 60% CAGR, right? Nobody lost.
right. Now, so we just need to put some knots and finishing touches on this because this is a real important piece of our community. So I have a couple questions that let's work through live on the air. One is, when is my lobster champagne dinner? Like, how are the lobsters gonna be delivered to Monkey's front door? Does he have to go out on some boat and catch them himself and you cook them? Like, how are we gonna handle the prize?
I'll do it in exactly the same way you handled the lobster dinner that I won, which was I'd organize and do everything myself, and I think even pay for it myself.
Okay. But you took the picture, right? Okay. So I'll do all that, and I'll take a picture of me eating lobster with butter sauce all over my face. Okay, excellent. Two, I think we should run a poll about for our Patreon community who they think will win round 3 based on where we are now, because it's a fascinating moment, right? I mean, our portfolios are still quite different in terms of the strategy, right? And especially after such huge run-ups, there's an interesting case to be made why Badger's portfolio will outperform Monkey's and why Monkey's will outperform Badger's. So let's do that on the Patreon next, right? Just see what the jungle thinks. But maybe most fascinatingly, importantly, we're getting a third contestant this year, and that is our Wall Street wildlife community itself. We are in the middle of nominating companies and then voting as a community which of those companies will go into year 1 of the Wall Street wildlife beastie portfolio. So, yeah.
Even if you're not in the Patreon, do you think can we take 2 minutes and can I give an example of some of the fantastic stock ideas that we've had submitted? I pulled them together into a pretty scruffy deck, to be honest. But if you want to get involved, the poll will be open when you hear this episode. I pulled together a bit of a scrappy deck, but we have 16 very solid entries for the community portfolio. And in year 1, we're going to be picking, to start off with, 5 of these 16. So in no particular order: Novo Nordisk, The Trade Desk, Lemonade, Rubrik, Abcelera, Viking Therapeutics, Red Violet, Credo, The Real Brokerage, Flow Traders, Reddit, Oddity, Ondo InsurTech, PayPal, Transmedics, and Roku. And our community have kindly chipped in, and they've shared a little their thesis on each of these stocks. So if you want to have your say and go in and vote, and if you're voting, you get like 2 options, 2 points for your first option, 1 point for your second vote. And then the top 5 stocks are going to get picked for the king of the jungle, and they're going to end up as the starting point for the community portfolio. So hopefully that gets our community portfolio off the ground with a bang.
Yeah, what I love about this badge is, we talked about this, I think maybe last week, wisdom of the crowds phenomena. And it's very bizarre because it's contradictory. In some ways, if you have domain expertise in the market, you can actually take advantage of arbitrage, or not arbitrage, that's not the right word, but a discrepancy between that perceived value and actual value, right? But on the other hand, it's been a proven, I don't know what to call this, not a scientific fact, but a proven discovery that if you have a big jar of jelly beans, right, and you ask some mathematicians how many jelly beans are in this jar, they're not going to get it right as often as if you poll, 100 people and take the average of the poll, and it's the 100 people that will be more accurate. Wisdom of the crowds phenomenon. I love this idea, and the quality of our of the submissions lies predominantly on the fact that we're kind of being insistent. Like, you're not just going to name drop tickers. You're gonna give us your thesis, and because we're affiliates of Fiscal AI, you're going to use that tool. We're teaching all our community members to get comfortable using that, and you're going to make us some pretty graphs and charts that tell a really compelling story visually, and that's what we're getting from the majority of our pitches. Fantastic.
It's really good. It's really good. And we'll have more submissions every month. Our Patreon community is going to nominate their favorite stocks. We'll have another vote every month, and we're going to buy the winning stock each month. So I guess we're going to start with 5. We're going to add like another 11. That's a pretty decent shaped portfolio, 16 or so stocks by the end of the year. And as you say, wisdom of the crowds, like, it's primed with that set up to beat both of us. So keen to see how our community performs.
Yeah. Oh, two more things, because what's fun about being our own bosses, we get to do whatever we want, right? So we still sort of coming up with the rules and the structures. I had an idea, Badge, and I meant to tell you this just in our private chat. I thought that there should be one rule about, say, double dipping in companies, like so that encourages original companies and original research rather than, say, duplicates. But what's interesting is that you bought ASTS after I had in my portfolio, and I thought, that's actually, confirmation, and it's good that, we both see things the same way. That's great. But I think we should put uh here's my suggestion. Each portfolio is allowed one duplicate company, so that, for example, uh because that shows conviction, right? Like, again, that's great, but no more than one, or maybe two, whatever. We get to decide on that. So in theory, just between me and you, I could still, for example, I'd still be able to say buy Google, right? Even though you have it, but that would be my one. I get to cheat. I get to scrounge from Badger's portfolio. Uh, and that came to mind because a couple of these initial Rex, I think there's a couple that three that we already own. No, you own Novo, I own Transmedics and PayPal. And so it's interesting. It's a little bit of a wrinkle. What do you think?
I think let's play it by ear. I think there shouldn't be any hard rules. Let's let our community do whatever they want to do. And if, like, say, if I won King of the Jungle 1 year, pretty much on the back of ASTS, well, it's a bit of a hollow victory, right? Because it was your idea originally. In fact, it was our community's idea. It was Stephen's idea. So, and if you win with like Google, then like the same, I'll make you eat a bit of humble pie as you take the trophy. So let's
All
wing
right.
it. Let's see how it goes. Let's see how it goes.
All right. So maybe the takeaway is it is a competition, and we want to bring in the top results. We want to be the top gorilla. It's hard to do that if you're replicating things, but timing matters. So that's the other thing. I bought ASTS, for example, much cheaper than you did, and so I got more shares. So even though we both own it, sometimes, say, somebody, if they bought Novo now and they're right, that's a much better entry pick than, say, 3 months ago, whatever, right? So in that sense, you're right. Artificial limits might be artificial, but we really do want to encourage original ideas and suggestions, or at least angles on it. So let's see how the guidelines shape up.
And it's worth a bit more than bragging rights. Like, we are going to attach some prizes, which might be swag, might be shout outs, might be a whole bunch of other stuff. If particularly to like folk who nominated an idea that went on to deliver like the greatest element of the gains for the community portfolio. We're also going to reward folk who seem to vote most effectively. Like, we'll be looking back at all the votes at the end of the year, and with a bit of Google foo that the Badger audit team will try and figure out later. We got the data to do it, and we'll see who basically was like voted for the biggest winners, and the whoever used their vote most effectively month after month. There'll be some prizes there too. And if you, again, like if you're on the YouTubes and you want to get involved in the voting and just be part of the fun, go check out wallstreetwildlife.com, join the community, and then your vote will count.
Yes, Badger, one more rule that maybe is the most important of them all. I'm sorry for leaving, I'm sorry for leaving it for last. Most important for last. Please keep in mind that the way we decided to do this is that I'm going to actually buy these community stocks in my Robinhood account, because Robinhood now made it very easy to just add a new account. It's actually brilliant. So Monkey will be depositing $500 at the initial, once we get the first 5 winners, right, into the portfolio, which makes it more than clear and obvious, Badge, to Monkey, that the other rule to begin with is, under no circumstances must the community, the Wall Street Wildlife community, nominate Greg's Sausages as one of their initial stocks, because if Monkey were forced to buy Greg's Sausages in his Robinhood account, the universe might explode, or some bad thing would happen, and we just can't have that. So
Wisdom of the crowds. Like if those sausages look sufficiently like jelly beans, they're going to get voted up.
Or maybe directly to our Patreon community or our YouTubers. If you really do want to spite your pal, your humble pal Monkey, then go ahead, go vote for Greg's, and then see what happens.
Anyway, ignore that. Pick the vote, like nominate and vote for the things you think are going to beat the market most soundly. Really, like over the 20-year term, but we're going to judge the scores at the end of year one as we go, like year by year.
Okay. All right, Badge.
Yes.
Shall we move on?
Yeah, you said something interesting there that I think is a good segue, because you talked about Novo Nordisk and like entry points, and you're right. Like I bought Novo Nordisk in my retirement portfolio and in King of the Jungle portfolio, and the stock is down from there. I'm still very happy about that. I actually added to it in my retirement portfolio fairly recently. And your point was good that like valuations and entry points do matter. And as a long-term investor, I used to poo-poo this stuff and just say, well, look, I want to be an owner of this thing. But it does make sense to use short-term technical indicators to just, if you want to buy this thing in the next month, maybe you try and find the right day or the right hour of the day to get into it. So you're going to give us a bit of a masterclass on one of your favorite tools, which is TradingView.
Okay, yeah, it's actually less a masterclass on TradingView and more about where long-term investors need to start. So listen up, beasties. I'm going to take the long route here, just establish the proper context. Let me read the question that came our way. Monkey, I know that a lot of technical analysis is done using TradingView. Is there a quick and easy filter that you'd recommend to immediately get a rough idea of support and resistance, to get those layouts you often share? Okay. Warning sign. And this speaks to the common critique of traders from the perspective of long-term investors. It is incredibly easy and tempting for anybody that starts doing this stuff to immediately start clogging charts with all of the patterns and the lines and the fugazis, you know what I mean? And I am deliberately going to say no. We're going to start with the fundamental thing you need to do, and it requires basically nothing. It really requires very little. So down the road, I will provide more layers and more fancy gizmos, but not now. Here's the first thing you need to learn to do as an investor. Recognize what game you're playing. You've heard me say that endlessly, correct? In this moment, I'm speaking from the perspective of somebody that is investing in the company. So they are not buying it to swing trade it. They're not buying it to day trade it. And they're certainly not buying it to scalp it. Scalping means like sometimes exits within minutes or seconds, right? That's none of that, right? You actually did your DD. You understand the company and you want to buy it. That's the context, right?
That's a good framing, because you can use these tools and this mindset in both of these ways. One where like a lot of the guys on Reddit or true short-term traders, they don't even care what the company does. They've got no interest in the business model. They're just looking at like price, essentially like the price and a bunch of other stuff and moving averages, and they're trying to like they win in their mind, I suppose, if they're say long, because they might be long or short. If they're long, they're trying to buy it for, let's say, $10 and they're trying to sell it for $15 and then they're out. Like they made their 50% profit and they want to do that over like a short enough period of time that they can keep like recycling that money.
Right.
But if you're a long-term investor, like you might use these tools to find when to buy, but your intention is still to be then at that point become a long-term holder. You're trying to turn $10 into $10,000 over like a long period of time.
Right. Okay. So I'm going to introduce two key ideas first. Number one, before you use anything that you would consider fancy. All you need to do is open up a stock chart. I use TradingView because it's just the most slick platform for this kind of stuff. It's a perfect complement with Fiscal AI, by the way. Like those are the tools, like Fiscal AI for research, TradingView for looking at the mechanics, right? All you need to do is put it on the monthly view. I'm going to go deeper into the different views and what they're used for, the different time zones. But on the monthly view badge, you see very clearly, just using your eyes, one fundamental thing. Is the company over the many months, so usually you're now looking at years, is the company's price gone up? Has it gone down? Or is it going sideways? And it's just incredibly clear. Okay? So, Badge, you're looking at this chart, correct? Of Global Water Resources. It's a company. I have no idea what they do. I don't care. But this is just a perfect example of the first step. Looking at this chart just visually, from the beginning of the candlesticks to where this photo was taken, late October, mid-October, how would you describe the direction of the price?
So I guess if we're looking, well, okay, so this stock was kind of doing some stuff, and it started to decline between, say, on the picture you got like November through to about early April, and it looked like it'd been a massive down, and then it dropped off a cliff, and it seemed like it was trading at like a much lower level, like $10, and then as the image was taken, like I guess a few days or weeks before that, it suddenly jumped back up to like its previous kind of range.
Right. Okay. So I would say in short that the movement here is down for the first half of the picture, approximately, then sideways, and it ends with a very big, massive up. So momentum-wise, if we actually disbar that very last jump, I would say the momentum is down in general, down and now down and sideways. So first important point is, only knowing that, I would not be tempted to invest in this. Why? Because going with momentum is easier than fighting it. So that's point one, and that's visible here, right? Now,
And because again, this is something I always used to like poo-poo and just say like the past doesn't predict the future. But you said something on the Patreon when you were fielding this question just like 24 hours ago, and it made me go, actually, no, you're right. There is actually something to this. It's not just like magic. And I think your point was like the institutional investors, they trade with momentum. So if you've got like a large part of the market that is going to follow like stocks that are ascending and buy into them and sell stocks that are on a down, well, that's like a self-reinforcing mechanism. So, you know, even notwithstanding everything else, like I don't like to use this stuff because I like to look at the business fundamentals. But if you put all that stuff aside and you're just looking at like the picture, there is actually a good rationale for why things will typically move in the same direction that they're going.
yeah, and to add to that, Badge, I'll say it more directly and to the point. What retail investors don't actually understand, or maybe it's not they don't understand, they don't feel, is that the vast majority of volume of trading every day is done by robots and quant shops. So it's literally, call it software programs that are reacting to price movements that have nothing to do with anything besides price and these complicated algorithms and patterns. And so this is the information that the quants and robots are using. And so from that perspective, nothing else matters but, how the algos are going to play against each other. Anyhow, for our purposes, Badge, this is this is mostly, you don't want to enter this company, right? From just the way the movement is going. But here's lesson 2, and this is returning to the initial question. Something happened here that was worth noting. And I already sort of did the work for you or for our viewers so you could see it clearly. Do you see that blue line basically in the middle, right? That is essentially the only line you need to learn how to draw for yourself, and you do not need any tools. This is why I'm kind of answering and not answering our Patreon's question, because this is something you do with your eyes, and it's not that hard. Do you see that during that phase that was kind of on the left half of the chart that was basically going kind of up and down, but essentially downwards? That there are 1, 2, 3, about 4, 5, 6 points where the lowest price hits that blue line and then goes back above it, and then it hits that blue line again, goes back above it, hits that blue line again, and goes back above it. In that instance, that is called support. Because if you think about it from the quant way, it seems like historically, anytime it touched that price, buyers came in. Or put it this way, the robots were programmed to start buying more as soon as it hit that point, right? So makes sense, called support, right? Then follow me on this. At one point, kind of halfway down this chart, what is that, like late March, between March and April, right, on this graphic, all of a sudden, call it a bad thing happens, right? Let's call it fundamental wise. This is global water resources. Somebody pooed in the water, right? And
if we look at the chart, right, it's probably like a quarterly earnings, because like every 3 months, US companies issue like new set of fundamentals, and that causes everybody to kind of, do their due diligence again and revalue the company again based on latest earnings.
Yeah, and but for our conversation, it could have been anything, but fundamentally something changed, right? And something that was bad, right? So all of a sudden, that moment where the bad thing happened, we broke that support line, that blue line, right? And notice, this is what's fascinating, is that even without knowing why, for the remaining months or weeks, the price went sideways, and then in a couple of moments it approached that blue line, literally touched it. This is the kind of like when technical people say, look, this is not coincidence. There's that one point on this line, July something, where the highest price literally touches the blue line and then goes back down. So then it stays below the line, and then we get to the very last candlestick at the end. But you can basically see this chart is divided into 2 halves. The times the price was above the line and the times it was below the line. And that is called the support/resistance line, right? Think of it this way. That line is like a magnet. The algos are drawn naturally over time to that line, and depending on the fundamentals, they will continue, call it testing that line, right? So if you are a trader, if you're thinking of owning this thing and you could see that there's not enough, call it good news to say break that line, then you don't want to buy in because there's not going to be enough juice to kind of break past it. And this is why I picked this photo. What happens now, whatever it was, October, right? We see that now a good thing happened, right? A good thing happened, and we're back exactly at that line again. So if I'm now thinking of owning this thing because I've done my due diligence, I am not going to buy yet. I don't actually know what happened. We could probably call up the chart and figure out, right, whether it's now above or below the line, but we don't need that for educational purposes. If I'm thinking of buying this right now, I'm asking myself one question. When it hit that line, did it then go back down, below, or did it actually break that line and go above? If it went below, I'm now not buying it still because nothing about the momentum changed. That line is still resistance. It still doesn't have enough juice to break. But if the fundamentals were good enough and it broke that line and one of those candlesticks now closed above that line, that is when you enter, because that that resistance line in technical trading terms became support. So TLDR, you gotta do two things. Get on the monthly view, see the momentum direction. Two, all you have to do is train yourself to draw one of these lines, and you do it by literally looking at where the candlesticks touch. You draw your line, and then you wait. Then you exercise patience. And you get to this moment where it gets tested. If it breaks, then that's your go. If it goes below, that's your not yet signal. How's that sound? Right. I mean, this is a little bit of where the art comes into it. A lot depends on your understanding of the company, and obviously, depending on the frame you want to use. The more information you have, meaning the more data points, meaning the longer the time zone, the more sturdy that value, is worth. If you're long-term investor and resistance breaks into support finally after, call it 4 years, that is really, really valuable data. But if you're doing more of the short-term thing and you're only looking at a couple of weeks, that could be just more short-term trading games, and you can't, that signal is nowhere close as valuable as the zoomed out picture. But I'm glad you asked that, because we're going to do round 2 of this exercise. This time, we're going to go live, and I'm going to show you another chart. This one is very important for our community because it's one we're discussing and where I did a little charting stuff on my own. And I'm going to ask you to tell me what you see here. And we're going to see how good Badger is with crayons. Badger plays with crayons. Okay. So, pop quiz, Badge. Here's how I thought I would ask you this question. Can you see the numbers okay? This is an actual live view of my TradingView watch list. So all Monkey's companies that he's looking at are, the tickers are bouncing up and down, but the chart itself is of Novo Nordisk, right?
I think that, yep.
And I want you to, as best as possible, zoom in so you could kind of see as finely as you can. I want you, here's what I'm asking you to do. Draw for me 2 lines. So this is just visually. This is again, this is not more complicated than using your eyes. And if you had to draw 2 important lines of that support resistance levels, where might you draw them?
All right, sure.
There's actually 3. There's actually 3 you could draw, I think, pretty easily. But
for one, like, this is not the weekly view which you talked about, because I can see this goes back to like 2014. So
this is the monthly view, right? So I'm glad you mentioned that. This is you're looking at the price history of Novo Nordisk for basically the last 10 years. Right. So this is for long-term investors, which are that's our gang. This is the chart that I would highly encourage everyone thinking about buying Novo to look at and draw these 2 lines or 3, depending. Where might you put? Start in the, call it the back half of the timeline, Badge. So from 2000,
I get it. Yeah. All right. So, and like if you're on the YouTubes, you might not be able to read like the little numbers. So apologies for that. But I guess over this 10-year view, it feels like, where it kind of bounced up and down. Is that like 28 to $32, something like that? That's kind of where you are now. Yeah, exactly.
Yes, exactly right. If I'm drawing a line here, this is where I would do it. Right? Whoops. Damn it, my crayons aren't working. But you see the white line right here?
Sorry, just going to say quick edit. When you face that way, you're pointing away from the mic. We can't hear you.
Oh, oops.
Yeah.
Here we go. There we go. I added, that's where I would make the first line. See that new yellow line right here? And you could see that at the beginning, all of these months, right? It was touching it and going below, touching it and going below, right? So somebody thinking of buying Novo around here, right? Their patience would be rewarded if they withheld, because it kept trying to go above this line. And at every point, it basically says, nope, nope, nope. And then it goes back down, right? And then trades below that line for now several years, right? See that. Now, all of a sudden, something happens here. What is that? We're talking about 2020,
It's
right?
COVID. That's COVID. It's 2020. That's the COVID pandemic. That's like
Exactly.
suddenly, yeah.
Right. So it was right about here where you see my cursor right there, where on the monthly chart, it finally broke that resistance line and that line became support. And this would be your tell to after your due diligence, after your fundamental understanding, this is when you buy right here, right? And turns out after this candlestick, now we're going way, 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 way up, right? And now, right? And then now you're golden because that line did its job, right? Okay. Let's keep doing this, but add one more line that's now more relevant to today. Where might you put that line?
Yes, I think I can see what you're hinting at. So if we come down a bit, like early 2022, it looks like it broke your yellow line, and then it kind of found like a new like range there. Yeah, that little section.
Yep.
Which we're now back into today. So it's kind of come. So go on, draw like another line somewhere around there. Yeah.
Yeah, exactly. This is, you could see, right, that this box here doesn't always need to be lines. It could be a box. This became like a range in which the price touched this point here, right? And then kind of drifted towards it. But this is the line, right? This is the line that is the lowest price at which the robots then said, nope, that's as low as we're going to go, right? So I'm going to draw this line here. This is our second line, right? And of course, the momentum took us hugely high up. So if you were looking to buy here, you have every technical green light imaginable, right? Because the momentum is straight and up, and it's not even confusing. That's why this chart is great to look at. There is zero confusion about whether you're going with momentum here, right? Now, it turns, and any investor basically deciding to buy here after the turn is now swinging against the current, right? And that, shockingly, because this is was a $400 billion company, right? Or higher, that momentum completely reversed. So here you would be going against the current, obviously, right? Yeah. So you would have to be saying to yourself, you know more than the market because you're in whatever, you're just that smart or you've done your due diligence, right? But momentum takes us all the way down. So it's not a good time to buy. And now this is why this is fascinating. We are now exactly at the point of the previous support line right here. And we see where my cursor is here. This is, I think, when I first made this chart for Wall Street Wildlife, when we were talking about, getting into Novo. And at this point, I said, not yet. Why? Because we got the touch, right? We got the touch, but that trend never really developed. So here actually was let me take that back. Here might have been like a decent point where you could say, if you trust your due diligence, it touched this line. You're like, okay, you're betting that the momentum is now reversing, right? So if you believe in the company, this wasn't a bad place to say, take an initial bite. That's what I would have done. Take an initial bite. But here we see that, nope, that's not, it just didn't, it's reversing now. So the real momentum did not change. This was, let's say, hopeful news that didn't pan out. But it's this moment here that now I'm really interested in, because we're back exactly at that line. And if I'm thinking about investing in Novo, and this is the TLDR, I am going to wait. Right? I'm confident in my research. I get it. I want to buy more shares here. But it's not until we see what happens at this point that I'm going to buy. Because if we break down below this line, the momentum still continues to be down. You'll be fighting the algos. It's going to be the catch and falling knife phenomenon, right? You're not going to beat, your purchase of however many shares are not going to overcome the algorithmic force that is down. But to the contrary, if we see this touch this line and now the price starts bouncing above it, that's where I would say, okay, now you can buy your initial, call it third or quarter, right? And monitor, because if it then starts drifting up again, now you keep buying. Now you have more confidence that this line will act as support and that things are actually turning momentum wise. Break down here and we have a shot actually at drifting down, way down to maybe this next line, because this looks like it could be another line from history. It might drift down to 37 in terms of.
Let me jump in because I'm kind of reluctantly with you on this journey. I sort of see something in this. This is not something I ever intend to use as part of my own process, but I kind of see what you're pointing at. But if you tell me that in, say, 2025, 26, that bottom line you drew, like the $29 line, has
this one?
any relevance in any way today, because that was like, in your lingo, like a support line that was established back in 2015 through 2020. Like this is not the same company now as it was then. And so in the real world, if you take all the mystical stuff out, there is no reason why what it did 5-10 years ago will have any bearing on the company today.
Right. So great. Let me address that point. You're absolutely right, Badge. Because this is such a long view, we're talking about a decade here. Anything that happened like way, way, way before has less value, call it, or less weighting than whatever the new levels are. So you're absolutely right. So, I mean, I'm talking about like a holistic picture, right? So yes, ignore those initial lines and we could just cut this chart in half and just look at, let's say the last 4 years. And that's why the main thing I would say is look at it's this level now, the 45, 40 level. That is the main line, the one line you need to pay attention to. Having that deeper understanding of the company's history, and that's just another data point. But yes, absolutely, you now weigh this line right here way more heavily. And let me finish this little school segment, Badge, with one important, I think, behavioral tip. You and I always say that to be a successful long-term investor, you need to cultivate the virtue of patience, right? Patience is maybe the hardest thing, right? And it differentiates winners from losers in all kinds of ways. When you actually get used to doing this kind of thing and you stop thinking of it as, and you don't actually, let me put it this way, you don't overcomplicate it by saying you don't start overlaying it with more mumbo jumbo, then all it's asking you to do in a moment like this is be patient. Just wait a little bit longer and you will know whether the price is going to keep going down or whether it's going to start going up. And if it keeps going down, wait. Patience, grasshopper. If it starts going up, yes, you're going to pay a little bit more, right? Because it started going up, but your risk goes down significantly. And that's kind of how really successful long-term investors do their business, right? They'd rather buy a company that's already excelling. It's already demonstrating the goods. And yeah, you pay a little more, but now you're reaping the benefit of excellence. Same thing here. You want to wait until the momentum is more clearly on your side.
Okay, cool and all, and this is like another skill set you can overlay, because ultimately you and I are long-term investors and we look at the fundamentals, and let's not confuse anybody that we're like technical trading guys. We are not. But and you use this stuff as like an add-on to your long-term skill set. Now, there is you said they're like successful long-term investors do this stuff. Well, they don't all do that. Some do. And some successful long-term investors completely ignore this stuff, right? And like I want to sort of defend just for a minute why I think it's you can completely ignore like all this price action and all these charts and graphs and like what could like a downside, what can go wrong? Because if you're not disciplined and you don't have the experience born of like decades of doing the stuff, then your emotions are going to take control. And so let me just give you an example. Say you drew your support lines and you're like, okay, I'm waiting for the momentum to turn. And if you're really diligent to the sort of the approach you just outlined, well, when you see enough on your weekly chart that you're like, okay, or monthly chart rather, like, okay, now I can buy, and then you buy, great. But if you're not disciplined, or you don't really, you don't have the courage of your convictions of that full technical trading skill set and your long-term skill set, well, you might find that you feel you've missed the bottom, and you're like, okay, well, it's going up, but I'm just going to wait for it to come back down so I can buy. And this is a trap that newer investors fall into all the time, which is they anchor on a particular price, they try and time the market, and they try and sell, and then they hope they're going to rebuy. And if they miss like that, one golden day or minute, whatever you're looking, where they didn't catch like the very bottom, they just kind of never rebuy. And so I'm not saying it's going to happen to you every time, but if that happens to you sometimes, well, that's how you miss like opportunities like Rocket Lab like a year and a half ago. If you didn't get in, it was down at like $3 for a little while. I was just sort of buying and owning and adding at between sort of $3 and $4 and $5. Well, if you say it got to like $6 and you're like, oh, I'm just going to wait for it to get back to $5, and it never does. And that, it was briefly like a $70 stock and it's now like a $50 stock. It's going to fluctuate wildly, but we're probably, barring like a very, very serious like destruction of the company, we're probably never going to see $6 again, right? And you just miss like a life-changing investment because you're quibbling over a couple of bucks when what you just want to do, if you want to keep it simple, I'm not dissing everything you've just told us. I'm just saying you don't have to do that. If you want to keep it really simple, you find incredible world-changing companies and you just kind of buy them at almost, I'm going to say at any price. I don't mean at any price because something like Palantir is like an insanity level valuation, but you buy it at any reasonable price and then you just kind of sit back and ignore it for a decade.
Yeah, I think we're talking about, now we're getting into medium/advanced level things. There's multiple skill sets that as you get better and better, you can use simultaneously. So it depends on what audience member we're talking about, right? I think for a beginner, I think you're right. If you want to keep it as absolutely simple as you can and expand your timeline, then you say to yourself, timing doesn't really matter to me because I'm happy to wait 10 years. If you're more in that medium advanced grade, you'll say, you know what I might do? I might break this purchase down into thirds. And my first third is going to be, let's say now, because I did my research, but then I'm going to hold off on the second and third and try to go with the momentum. And if I miss it, then I already have a third and I looked at the chart again and sure, I missed 10 percentage points, but reminder, now the momentum's going the right way. It's time for the second third, so you got to know yourself, of course. And you did mention that it is a question of discipline and it is a question of being patient. And I think all investors should cultivate those attributes but different games for different people.
Yeah, it's good. I'm glad let's do this regularly. And I think it's like, if you go back 2 episodes ago, I did a bit of a 15-20 minutes on intuitive surgical where we actually looked at the fundamentals and we looked at some stuff in Fiscal.ai and we looked at like the quarterly earnings. And now we've just had like a really nice session looking at the chart. Like these are both interesting skill sets. And we're going to talk about both of these things on Wall Street Wildlife in future episodes. And when we get, if you've got a company you want us to get our teeth into, like let us know on the Patreons. And from time to time, we'll try and do that.
Yeah, fantastic. And as homework to our listeners, to return to the original question, ignore the fancy indicators, ignore all that noise for now. Just learn to use your eyes and draw a couple of lines. That's it. I swear to you, this is what many professionals do. They've gone down all the, crazy rabbit holes, and they're like, for the fundamental view, that's all you need to do is draw like 1 or 2 lines and you're good. So I hope this was useful, and I'm happy to do more, like as per your suggestion. Badger, enough crayons. Put your crayons down, buddy. Tell me about your latest purchase for the King of the Jungle portfolio. What are you buying?
Yeah, I bought in my retirement portfolio and King of the Jungle, Uber, the transformation giant, like the transportation giant. I've had this on my radar for quite some time, and I hadn't really looked at it properly as an investment. And actually, you know what blew my pants off? Like, we all think we know Uber. I didn't realize actually in the UK, like you guys have like DoorDash and stuff like that in the US. We don't really have that stuff in the UK. Turns out we do. I didn't realize. So in the Uber app now, okay, I always thought about Uber as being like, transportation, get me somewhere. And I knew they did Uber Eats, which is like ordering food from restaurants. They've also got like a whole like logistics thing in the app now. I had no idea it was there. I just never like scrolled far enough to the right of options. So you can get like, if I want to send like a set of door keys to you, I can send them in an Uber, and it's like cheaper than like a passenger in an Uber. And I can get like my Uber driver to go to like my local supermarket or like wine store or hardware store and like just literally go and pick stuff off the shelves, fill the bag of stuff I've ordered, and then they'll get it to me like, in half an hour. So, and don't get me wrong, you're paying for that. There's a whole bunch of fees that the platform earns, but I didn't realize this even was a thing in London. So like that kind of perked my ears up when I started doing my research. The thing that actually caught my eye and why I looked at this properly was just a really interesting innovation story. And I think they just did something really smart. Like, they've got this hordes of drivers who today are human drivers, like sat in cars, driving people around. But a lot of the time they're just kind of sitting there waiting for like their next ride. And I just caught in the news like a month or 2 ago, Uber are now having these like side gigs or like non-driving tasks for drivers, which might be like taking a photograph of like a menu and then translating it, or doing other sort of tasks they can do on their phone where they're training AI, or they're doing like translations, or they're doing like various things. And then the driver can earn like a few bucks in their non-driving time. I think that's really smart, like leveraging. It's like, it's good for Uber, it's good for the end user, and it's good for like the driver. They're using their like dead time in some interesting way. If they want to do that, it's like optional. So that just made me go, this is like a really innovative company. This is not just like, a transport company. And so I started looking at it properly. And then when I really started thinking about it over the weekend, well, last week, so let me share not so much my thesis, because I've taken like a starter position in this. For this is like a less than a 1% allocation in my retirement portfolio. So this is a bit like, probably a bit less than my first third. And I started to think about this, and I want to kind of run this idea past you, but I've bought the stock anyway. And it's really like the major risk / opportunity that faces Uber today, because sure, they do logistics and they do restaurant delivery and everything else, but the thing that's really going to change the trajectory of this company is autonomous vehicles. When we take the drivers out and it's just like cars driving themselves around, maybe doing food delivery or maybe moving passengers around. And so the big question for Uber, I think, is like, is this an opportunity or is this a threat? And if we ignore Asia, which is like, more than half the world, but let's just put that aside and we just think about essentially like, Europe, the UK and North America and a bunch of other countries, there are really only 3 credible autonomous driving platforms at any scale today. which are Tesla, Waymo, owned by Alphabet, and then, whether you may not realize it, but Nvidia Drive. So Nvidia have like their own hardware stack, software stack, and that's essentially that's the software, the autonomous vehicle solution for pretty much everybody else, like the BMWs and the Mercedes and all the other kind of Western world manufacturers. They're all sticking like Nvidia Drive in their cars. So, and there's like hundreds of other tiny ones, but these are the three, like the three giants really, and Tesla, Waymo, and Nvidia, meaning everybody else. So if we think about how Uber interoperate with those three, it's actually a really interesting, different story for all three, and it could change quite a lot. And depending on how this story plays out, is going to determine like the future of Uber, the company. Because they had a go at doing autonomous vehicles themselves, and I think, well, sadly, there was like a fatal accident, I believe, and they've kind of retired that program. They now seem to be very much positioning themselves as like the platform that captures demand, i.e., it's on hundreds of millions of smartphones, probably billions of smartphones, and it's like if I want a ride as a rider, like I generally go to Uber, maybe Lyft in the US, maybe Bolt or some other apps in the UK or Europe, but like most people, where Uber exists, most people have Uber. And I'm going to ask you your Uber rating in a minute.
Actually, Badge, may I just comment one side bracket? Just during my drunken Austin adventures 2 days ago. I'm a Lyft guy myself here in Austin, but I went to my buddy and I went to get the little scooters. Those little the little scooter things that people leave all around town. And I did not realize, but that was through the Uber app. So, because Waymo cars are now driverless here in Austin, they're everywhere. I also tried to get a driverless car to pick us up through the Uber app, but for whatever reason, I think they're not allowing many people to use them. They're allowing some, so I couldn't hail one of those. But yes, the surprise for me, in maybe a similar way to you, is Uber is actually the verb, right? You Uber, you don't lift a ride, you Uber a ride, and that now means like 50 different kinds of things. So yes, you're on point so far.
Yeah, very good. So let's come back to this sort of key thing and how the market's going to evolve. Like if we just accept that Uber probably aren't going to launch their own platform again, and they're trying to become like the demand aggregator, so the one app that most people have on their phone and go to if they want to go from A to B, rather than most people needing to have like the Tesla app, the Waymo app, and then like the Nvidia app, or maybe even like the Mercedes app and the BMW app and everything else. If we accept, and I accept, so that's why I bought the company, that probably the majority of people are going to want to have like one app, maybe no more than two. And if they have two, one of those will almost certainly be Uber. Well, they've already got distribution. So they've got hundreds of millions of miles demand that these three companies are going to want to service, the companies that are actually providing the journeys. And so you've got these three different starting points today. You've got Tesla, who are pretty committed to rolling out Robotaxi and having their own in-house built app, which they've already built and deployed. So they're kind of off doing their own thing. You've got Waymo, who are partnered directly with Uber, and they're using Uber to book Waymos. And I don't think there's a separate Waymo app, maybe unless you're like an Alphabet employee. Most people are booking them through the platform. And as you said, it's only like beta testing still, perhaps. So probably not every possible passengers can use it. And then you've got Nvidia, and I don't think there's been a definitive announcement, but it looks very much like the Nvidia Drive platform is going to piggyback with Uber and have that as the kind of portal. So you've got kind of Nvidia in, Waymo in, Tesla out. Now, here's the question, right? If we believe there's probably just going to be this one app, like, okay, maybe Tesla cars are nicer in general. Like I'm happy if I book an Uber and it's like a Tesla. I'm like, oh, cool, I've got like a Tesla coming, not like some Honda Civic or whatever. And am I going to be sort of happy enough and care enough that I only want a Tesla and I'm only going to have like go to the Tesla app to book my car? Because there are going to be fewer cars available, certainly in like once the market's established. I can't, not everyone wants to own a Tesla. So therefore, Tesla will be less than half of the total market of like driven miles alongside Mercedes and BMW and all the other hundreds of manufacturers using Nvidia. So like, I sort of feel like Tesla are probably not going to cut their nose off to spite their face. They're probably going to have their own app and they're going to come inside like the Uber tent as well, because you've got like a bunch of essentially like free demand there. And there'll be some pricing agreement in the same way, as they've opened up the supercharger network to non-Tesla vehicles. Like they can maximize the capex, and it means they can scale out the supercharger network faster because they're earning income from like the other non-Tesla manufacturers. So that's like better for the Tesla ecosystem. I think the same logic applies here because, okay, if Tesla put their cars on the Uber network, there'll be that much more demand, so they can then scale out the cars faster, so they'll have more cars on the road. Like, surely that is going to be Musk's logic once they're out of this like pilot phase.
May I comment or? It's you named it actually. When you said surely that must be Elon's logic, right? And the whole time I'm listening to you talk. The first thought I had was, okay, we're in this weird world now. Not weird. We're at the stage now where companies like, say, Google and Apple are, in a sense, a duopoly, but now they're finding ways that they have to partner in order to go to the next level, right? So in that sense, I think I'm buying what you're selling, which is logically, if we say there's a duopoly here, you're going to have the Tesla world and then the Uber world, and it's a big enough pie for two anyway, right? So that's maybe worth noting, right?
Sure.
And then I started thinking a little bit about, another analogy, our companies, the Starlink versus ASTS, and that's another way that there's probably a duopoly exists and so forth. But it's when you said, surely Elon's logic is going to be X. And based on what you said, yes, I would say logically, rationally, that would be a pro to go forth with this investment. Because, yeah, that's what it looks like, right? Yeah, it's what it looks like, right? But that Elon Musk factor, where when he goes for something, right, he's based on everything I understand from the SpaceX Starlink case, right? He's willing, he's so, call it maniacal in wanting to, achieve victory sort of at all cost. And he has obviously the capital base and the smarts and all that. I just don't know how well I would sleep at night knowing that my counterparty here is the one guy that might even sabotage things or, like go be some weird cost leader loss thing, the way, Bezos sort of slowly defeated all of the opponents by undercutting them over and over across years and years. And it's like, I think I'm trying to say, like, anybody but Musk. If it was anybody but Musk on the other side, I'm like, yes, I get it. I'm in for this duopoly vision. Okay, Badge. I hear you. I think this is an interesting moment. I see in this moment, I see both a tremendous upside, obviously, and I'm sorry, I can't quite get past my own initial worry about the Musk wild card. And so what I'm going to do is take your feedback seriously. I'm going to poke around the investment thesis some more. Hopefully our Patreon jungle cats and capybaras will tell us their views. I'm going to probably call up a chart and just see what that says. Add some voodoo in there, and let's check back in a couple months' time and see how this is shaping up. But thanks for bringing this to our attention, and good luck since it's an official position for you now.
Yeah, awesome. I definitely welcome some a technical trading view, because as I said, this is like a starter position for me, so it's pretty sort of small in the grand scheme of things, and I do want to add to this. So yeah, looking for your charting expertise to tell me it's a good time to add.
Fantastic. It's just that, damn it, I don't trust Musk anymore. I just don't. In the business, in that business sense, I don't, even if I'm a Tesla shareholder, I'm like, oh my God, I don't know what this guy's really up to. So.
Very fair, very fair. Hey, before we wrap up today, I just want to acknowledge, so we just crossed 4,000 YouTube subscribers. So if you're on the YouTubes, thank you very much for being part of that journey. It's going really well, and we got well over 1,000 listeners on like Spotify and the other podcast platforms, plus our most important audience now, nearly 300 Patreons. So yeah, this is turning into something.
Yeah, we're doing something, Badge. All those acorns and bananas are finally adding up. So yeah, no, that's fantastic, and we're having a ball, and I think we're legitimately helping people and succeeding in our mission, which is to really emphasize the fundamental principles, the kinds of thinking you should be doing, rather than merely saying buy this or don't buy that. That's like a side, putting our bananas where our mouths are kind of thing to show you that we're eating our own cooking. But it's the principles in the community really that we're growing and fostering, and it's obviously taken off. So yes, thank you, and good job us. Yeah. Woo woo. Next milestone is 5K, baby. 5K.
Yeah, it's coming quick. It's good. We're gonna hit like 5,000 subscribers in the next couple of weeks. I think it's awesome.
Yeah.
And one thing I want to say, that like if you're listening to this, because I was almost like I was always excited in a weird way, because like Thursday, Friday last week, the market. Today is the 10th of November. Like last week, the market started to take a bit of a downturn. We had like 2 down days, and it looked like maybe that's the beginning of the end for like this growth cycle we've been in for quite a long time. And obviously I'm like kicking myself because I probably should have sold a bit more. I have started raising cash, but I probably could always do a bit more. But at the same time, I was quite excited over the weekend, because I'm like, well, this is actually where the podcast is going to prove itself, because we are here for the long term, and we're going to be investing alongside you guys through the next couple of market cycles. Like every cycle is like 5+ years. We are going to be here losing money alongside you when the market goes south, and we're going to navigate that as best we can. And hopefully, we can still afford to like pay the electricity bill, and we can still keep producing the podcast. And like, it's real, it's legit. Like this is exclusively how I fund my life. And Krzysztof, you're a professor, but your investments are a very material part of your own like wealth and future. So this shit is real for us, and we're going to lose money alongside you, and we're going to navigate our way through that pain. Don't know when it's going to start. It looks like it didn't start, because today is Monday, and it looks like the market's on its way back up, because like there's a $2,000 stimmy being paid, and God knows like other random like puppet things to try and keep the market afloat. Don't know how long that can go on, but it's like the music still seems to be playing right now.
That's right. And one way you'll know is that next year's winner of the top banana trophy, we're gonna need to decide if things went well. Maybe we'll upgrade this to a slightly less plasticky, bigger version, or if things go down, maybe this too is a little too extravagant. So time will tell. But yeah, we're very much in this with you.
Very good. Well, that was a plotbuster episode. We got a whole bunch of stuff we didn't get to. We're pushing it to next week. But Krzysztof, are you ready to become a B-Stone investor?
Look at the hat I'm wearing, Badge. What's it say? What's it say?
It says beast. It says beast.
Well, there you go. There's your answer.
A reminder that the people on this program may hold positions in the companies that are mentioned. Buying and selling stock carries financial risk, which could include loss of capital. The views in this program should not be taken as personalized advice. Before acting on any of the information provided, listeners are encouraged to consult a financial or tax professional.